This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Page 65. Big area, not unusual to find something along these lines in an exam, a law exam. Lifting the veil. The veil of incorporation, it's called. What's a veil? I'll tell you what a veil is. Are you married, Eddie? Yes. Yeah. And when you got married, did your bride have something over her face like this? No. Well, that's traditionally what we have in the UK. The bride hides her face, and then the priest declares them man and wife, and she lifts the veil, and the man says, "Oh my God, what have I married?" So that's the veil. Okay, it hides the identity, and it's a protective measure. I presume in the context of marriage, it's to stop you kissing the bride before you're officially married. I don't know. But that's what the veil of incorporation is, and it's something that the directors and shareholders will hide behind. The company deals as a company. The identity of the people dealing on behalf of the company is not relevant. It's the company that you're dealing with. But to insist and to continue religiously to consist upon this concept that the company is a separate entity does give rise and does lead to situations which are clearly illogical, absurd, unfair, and so the court will lift the veil to see who lies behind this company shell, this company exterior, and lift the veil to see what lies behind, either directors or shareholders. And we've got examples here where the court will look behind the veil, where justice requires it, in order to prevent fraud or illegality or oppression. Exam questions: what do you understand by the veil of incorporation? What are the circumstances in which the court is prepared to lift the veil? Exam questions come up. It's not unusual to find something along basically any of these pages. Here are some examples where the court was prepared or was persuaded that the veil of incorporation should be lifted. Guildford Motor Company and Horn. Mr. Horn was the chief executive officer of the Guildford Motor Company. And one of the terms of his employment as chief executive was that if he were to leave the company, he would not contact the company's customers. He wouldn't steal or try to steal the existing customers of the Guildford Motor Company. I'm going to suggest it's not unusual that if you're in employment and you move to a competitor, your competitor may very well expect you to bring some of the knowledge from your previous employment and use that knowledge to write to your former customers from your former employer. And so what you can do, and what the Guildford Motor Company did, was that they put a restrictive covenant into Horn's contract of employment and said he will not contact the Guildford Company customers for a period of 2 years. So Horn left. After a period of time, he left the company, and he went home and said to his wife, "I've given up. I'm not working for the Guildford Motor Company anymore." She said, "What are we going to live on? How will we survive?" He said, "Don't worry. We'll create our own motor company." So they created the Horn Motor Company. And Mrs. Horn was the only director and the only shareholder. Mr. Horn had nothing to do with it. He couldn't do, could he? Because he had this restrictive covenant from his former employer. So he wasn't allowed to take part in this competing company. So he didn't. Mrs. Horn ran the company, and she wrote to a number of people who happened to be the customers of the Guildford Motor Company. How did she know who to write to? Do you think possibly that Mr. Horn had taken with him a list of customers and their email addresses and their postal addresses and the contact details of the person to whom Mrs. Horn should be talking? Of course he had. And she wrote to these customers of the Guildford Motor Company, and one of them contacted Guildford and said, "I've just had a letter from a Mrs. Horn. Isn't that the wife of your former chief executive?" And of course it came out. So they sued. They went to court and they took the Horn Motor Company to court. And the defense was by Mr. Horn. He said, "I have nothing to do with it. I'm not a shareholder, I'm not a director, this is all being run by my wife, I am not involved." And they lifted the veil of incorporation and found him hiding in a corner and said, "There you are, you're pulling Mrs. Horn's strings, you're telling her who to write to and what to write." And he was clearly in breach of this perfectly reasonable restrictive covenant. So lifting the veil, it was a sham, it's called a sham company. The Horn Motor Company was a sham. A sham is artificial. Let me see if I can see what the dictionary calls sham. It's an artificial way of trying to get round a perfectly reasonable restriction. Sham. Sham, 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 sham. Sham, a thing or person that is not genuine. What's genuine? Genuine, real, sincere, honest, actual. Yeah? So sham is an artificial way of getting round this perfectly reasonable restrictive covenant. Daimler and Continental Tire and Rubber. How many times have we had rubber in these lectures so far? How many times? Say? Dunlop, yeah, Dunlop and New Garage. Just one second, who? Dunlop and Selfridges, yeah, which defined consideration. Dunlop and New Garage the clause was not a penalty, it was a genuine pre-estimate to determine loss. So we got Dunlop and New Garage, Dunlop and Selfridges. The tyres and the 10 millimetres where it is a presumption that statute is not to create an offence of absolute liability, unless statute itself makes it perfectly clear. Any other tyres we've had? You may know, you may remember. It's a case which I've glazed over today. It's a case which I didn't go into the detail about. Say again? Silverstone, yeah, Silverstone racetrack. That involved an advertising way of advertising the Daily Express. There was a bridge in the shape of half a tyre over the racetrack, the Formula One racetrack called Silverstone in the UK. And the Daily Express advertised their name on this tyre. But then they changed the track system. They changed the layout of the track, and this tyre bridge was no longer over the track that they were going to race down. So the advert was worthless. It came into the context of business efficacy. What was the other case in business efficacy? I drew a picture of it on the screen. Sandbank and sharp rock. Yeah, what was the ship called? I'm not going to give you a way of remembering the name of this case. I refuse to give you a way of remembering the name of this case. What was the name of this case? Oh, the Moorcock. The Moorcock, yes. Oh, that's incidentally, that's another bird case, isn't it? A moorcock is a type of bird. Yeah. So the Moorcock. All right, Daimler, Continental Tire and Rubber. This is a case where we have two English companies dealing with each other. Daimler Limited and Continental Tire and Rubber Limited. And there's an order coming from Daimler to the Continental Tire and Rubber Company for the delivery of some tyres to a particular location in the North African desert. Not a problem, surely. The year was somewhere around 1942. What was happening in North Africa in 1942? At war, yeah, we were at war with Germany. And Continental Tire and Rubber said, no, we're not going to deliver these. So Daimler sued for breach of contract. And the court lifted the veil and discovered that every director of the Daimler company was a German national. Every share which was owned in the company was owned by Germans. The only English person involved in the company was the company secretary. And to make Continental Tire deliver the tyres to the North African desert to all these Germans was going to be trading with the enemy. So they lifted the veil and discovered all these Germans, and then they closed the veil again and said, no, don't deliver the tyres. But Daimler is an English company, and the company is separate and distinct from those who manage its affairs and those who are beneficially interested in the success or failure. It's an English company dealing with another English company. What's the problem? This English company is full of Germans. Can you create an English company? Can you? With your residential address out here overseas, can you? Why not? Anyone can create an English company. I did create an English company on behalf of a Bulgarian man that I met whilst a Bulgarian bar owner. He wanted an English company created, so I created one for him. And I gave his address, I've forgotten his name now, I gave his address as flat 22C, apartment block 49, entranceway 13, and the most complicated address that you don't normally have in the UK. But yeah, there's no reason why anyone should not be able to create an English company, and Daimler had done. Next case on page 65 is that very common English family name, Brahimi. It's almost as common as the name Smith. Not quite. Sorry? Brahimi. I got really excited when I was watching the World Cup last time it was on, because I was watching one of the Arab qualifiers playing in the World Cup, and one of their players turned away from the camera, and on his back it had Brahimi. Oh, I was so excited. Reminded me, what did it remind me of? What was the case, the other World Cup case that it reminded me of? Bettini and Guy. Yeah, I was so thrilled to see the name Brahimi. Brahimi and Westbourne Galleries. Now we're going to come across Brahimi on more than one occasion tomorrow. Brahimi is quite a big case, it's quite an interesting case. And it's about two Persians, two Iranians, who had moved to London, and they created and set up a business buying and selling carpets. Now, carpets from the name of Iran before it became Iran was Persia. And Persian carpets have got the reputation of being really good quality. I mean, they are worth paying a lot of money for. And so these two Iranians, these two Persian people, had come to London and set up a partnership to buy and sell Persian carpets. Very successful. After a period of time, they were paying top rate of tax. And top rate of tax at the time, it was when Margaret Thatcher was in office, Top rate of tax was what? Give me a figure that you think may have been the top rate of personal tax for a high-earning individual. Give me a figure. What percentage tax would you think maximum you should be paying if you were a top earner in the UK? 40. I think that's a reasonable shot. I'm not going to write 40 down because actually it's not right. Okay. Do you want to double it? 80. Do you want to add another 3? 83%. Yeah, 83%. Top earners were paying 83% tax. If these top earners had shares in other companies, which you would have, wouldn't you? If you're earning that much money, you're likely to have so much money you don't know what to do with, so I might as well invest it in others. So they would invest it in other companies, and other companies would pay dividends, and added on above that 83% was something called investment income surcharge. Give me a figure which has obviously got to be less than 17. Give me a figure for investment income surcharge. 5. Do you want to triple that? 15. I had 2 clients who were paying 98% tax on their dividend income. One of them particularly was furious whenever a company declared a dividend which he had not expected, because it meant he was only going to get 2 pence in the pound for the dividend, and when he put the dividend check into the bank charges were then going to eat that 2% up as well. So every dividend he received, he actually got nothing. That's what we're facing with Brahimi and Westbourne Galleries. Top rate of company tax at the time, the top rate of company tax was 55%. So it didn't make sense to be a partnership. Why not why not convert yourself into a limited company and pay 55% instead? You can keep the money in the company, and then eventually the tax rate will fall down, and then you can distribute the profits, and you're not going to be paying 83%. So that's what Brahimi and his friend Nazar decided to do. We'll convert ourselves into a limited company called Westbourne Galleries. And one day Nazar got a phone call at home. It was his nephew. Nephew was called George. George said, "Uncle, can I come and see you?" "Yeah, come round for lunch." So he went round and he said, "I've just finished business school. I've got my MBA. I'm fully conversant with information technology and marketing ideas and strategy. And I'd like to see if I could have a job in your company with Uncle Brahimi and maybe find some work there." So Nazar went in on Monday morning and said to Brahimi, "George contacted me, wants a job. Is there a place for him here?" "Why not?" said Brahimi. "Bring him in." So George came in, and he was like a breath of fresh air, was George. He rationalized the accounting system. He introduced computers. He introduced proper accounting records. He found new suppliers and new customers. He sourced and kept an inventory control which had not previously happened. Nothing other than that changed. But Brahimi said to Nazar, "We can't afford to lose George. George is too good for our company. What about we appoint him to the board of directors?" "That's a good idea." Nazar said, "What about giving him some shares?" "That's a good idea as well. Lock him in so that there's no incentive or motivation for him to leave." Now, when they had created the company, Brahimi and Nazar had taken 300 shares each, and it was agreed when they offered George this directorship and shareholding that 100 would come out of Brahimi, 100 would come out of Nazar, and George would get 200 shares. So we've now got 200, 200, 200. Things carried on improving. The graph is going up like that. And one day George phoned his uncle and said, "Uncle, can I come and see you?" "Yeah, come round for lunch." So he went round and he said, "I've had an idea. Why do we not vote Brahimi off the board of directors. Just get rid of him as a director. Nassar said, we can't do that. George said, well, actually, we can. To remove a director, you only need one more vote in favour than votes against. And if you and I vote together, that's 400 shares, and he can only defend it with 200 shares, so we can vote him off. We can't buy his shares off him. It's not normally acceptable in company law that you can require a shareholder to sell his shares. We can't buy his shares off him. But think about it from his point of view. No responsibility, no work, and a third share of profits. Well, where's your complaint? Oh, hang on. A third share of which profits? Profits after directors' remuneration. The company makes 400,000 profit. Nazar and George take 397,000 of that, and Brahimi gets his 1/3 of what's left. That's not right, surely. This company, Westbourne Galleries, was really a partnership. It was a partnership, and then for tax reasons they converted it. But it's really a partnership. Just got a limited company name behind it. But the face says that it's a company. And the court lifted the veil and said, no, it's a partnership. It's what's called now a quasi-partnership company. It's a company which is really a partnership. And one of the principles of partnership law is that if we don't agree differently, then any partner is entitled to take part in the management of the firm. And by taking Brahimi out as a director, you're depriving him of his right to take part in the management. So the court said, no, this is not fair, this is not right. And the court used its discretionary power to direct that the company should be liquidated. Kill the company. It's not fair to remove Brahimi. The relationship of mutual trust has now disappeared. Brahimi won't dare turn his back on these other two in case he gets a knife in his back. So the relationship of mutual trust has disappeared. Liquidate the company. Value the assets. Pay Brahimi his 1/3 share. And if you two want to start up again in your own name, then you can. But at least this way, Brahimi gets his 1/3. In the context of a company which is in reality a partnership, the court will lift the corporate veil and see what lies behind. I thought I said earlier that 40 minutes was the extent of the period of time that you could concentrate. You're looking dead. We're all right. Are we still? You're still with me? You look like a frightened rabbit. Oh, are we all right, Benita? We're still motivated. Good. And if a 5-minute break? Yeah, it's all right. Let's try it. Let's have a 5-minute break. We started at 20 past. It's now, you've had 55 minutes. Have a 5-minute break, and we'll come back to Veil of Incorporation in 5 minutes' time. Yeah, I shall be starting at 20 past. Okay, Brahimi is an example of what's called a quasi-partnership company. And although it is a company strictly, legally, although it's correctly formed according to company legislation, it's really underneath, behind the veil, it's really a partnership. And it's therefore contrary to the principles of partnership to deprive Brahimi of his right to participate in management. The next one is a case called R and All, and you know who R is. You know who R is. The Queen, yeah. And that, whenever I write R and all, it reminds me of Rolls-Royce. If you just take the V out, it's Rolls-Royce, isn't it? Roll. And we came across the case involving Rolls-Royce earlier today. What was that one? What was he called? Who was the plaintiff in the Rolls case, in the Rolls-Royce? All of you have worked with someone or know someone of this name. Alexander, yeah, Alexander and Rolls-Royce. And he won, didn't he? Did he win his case? No. What was the area of law? Non-financial loss, non-financial suffering. There was a case where there was a person who did win as a result of non-financial loss of pleasure. What was that one? Who? The lady with the wool. That was an exam question. What was the one where non-financial loss was successful? Gulby. Melnia Gulby. Swan Tours, yeah, Swan Tours. Astrid's Wall was a reduction in the contract price proportionate with the amount by which the builder had not built the wall high enough. And that was based on a question, on a case called, it's not a name that you would normally associate with swimming pools. If you referred to it as a swimming pool case, that would get you the mark. The case was Ruxley Electronics and Forsyth. All right. R and all. A section of the southern coastline of England. It is only a section, it's not drawn in any way to scale. This area is called Poole Harbour. And it's one of the biggest natural harbours in the world. This is the sea down here. And this is the land. It's a substantially sized place, and I used to sail there when I was in the UK, and I used to race dinghies, small boats. I used to sail sometimes in Poole Harbour. It's an enormous place. And here, there is an outward-bound adventure school for children. So during school holidays or long weekends, or sometimes the school would say, let's take a week off work, and they'd take a class or two classes down to this adventure centre. And the chief executive of this adventure centre was our man All, Mr. All. One of the things they would do is they would run down rock faces, with a piece of rope fastened around them, and they'd abseil down a rock. Or they'd go orienteering, or one of the exciting things that they used to do was they used to get canoes. What's a canoe in your language? Oh, of course it is, yeah. And they used to have these canoes, and they would paddle across this area here, and then they'd be picked up by a van and taken back to the school again, back to the adventure centre. And one day, one particular occasion, All, the chief executive, said, well, you can all go out now in the canoes and paddle across the mouth of Poole Harbour. And what he failed to do was he failed to take any attention of the weather forecast. And whereas it was a lovely day when they set off, a storm blew in and capsized the canoes. They were halfway across and the canoes capsized. Yeah, the children are all right, aren't they? Because they'll have life jackets on and they'll have helmets on and protective warm clothes. No, they didn't. They didn't. He had failed to make sure that the children were properly equipped. And I think I'm right in saying 14 children lost their lives as a result of his stupidity. If you kill someone, Sigsworth murdered his parents. But if you kill someone and didn't mean to, it was not my intention to go out and kill, that's not murder. That's a criminal offence, but it's not murder. And it's called manslaughter. To slaughter is what you do with animals when you take them to the slaughterhouse and you kill them and cut them up and then sell them to the butchers. And manslaughter is when you kill, not intentionally, but you kill a person. I didn't mean to, but okay, by my recklessness, these children were allowed to die. So you have to sue somebody. It wasn't the children's fault that they got killed. Well, whose fault was it? It was all on the company. The company, said all, allowed these children to go out. It's the company who should be sued. And that doesn't make sense, because you can't send the company to prison. And it wasn't the company that made the decision. And it wasn't the company that was negligent. It was the individual within the company who had allowed this to happen. It wouldn't be right. It wouldn't be fair. It wouldn't be morally correct to allow this chief executive to hide behind the veil of incorporation. So in the context of what is called corporate manslaughter, where the actions of a company's employee or company's representative results in the accidental death of others, then you should be able to hold the individual responsible liable, not the company. So corporate manslaughter, I always confuse the word manslaughter. I always think it's man's laughter. The laughter of a man. So you can remember the word manslaughter as as man's laughter. That's distinct from murder. Murder is actually killing with malice. Murder is killing with malice. This will never be asked. Malice, aforethought. The killing to take place within a year and a day is murder. Malice is evil intent. Every time I look at you, Sandra, I think, good God, I could murder that woman. Now, if I've made that, if I've had this malicious thought, and then it's gone away, and maybe 2 months later I think, yeah, I think I will. So long as I kill her within a year and a day, then that's murder. If I left it for 13 months and then I kill her, that wouldn't be murder. So it's not malicious thinking, it's not nasty, evil thoughts which have led to the killing. It's just because I saw her again on the street and thought, I'll do it now, and killed her. So murder is killing with malice, aforethought, the killing to take place within a year and a day. And if I have the nasty thoughts and I don't take action for a year and a day, then it's not murder. It's just I happen to bump into her and I happen to have my knife in my hand. It's just accidental murder. Okay? No, it's accidental murder. It's manslaughter.
If you fight in a bar and kill somebody.
If I fight in a bar, that would be manslaughter. That's not murder. But if I see her in a bar and I think now's my opportunity, then that's murder. That's never come up. And the probability of it coming up in June is probably somewhere around 0.0005% of a chance of that coming up. So don't worry about it. It's just something you can talk about at a dinner party. Punishment for manslaughter is prison. It's prison, but it's not as much prison. It's not as much prison as murder. It's a sort of lesser degree murder. Americans will just gas you or inject you, or they'll kill you with their friendly fire. What a way to go. Friendly. How did you die? Friendly fire. The Americans got me.